First of all, the ways in which you can add value, and when I specifically say that, I mean NOI, there's just so many ways to add value that it can really help mitigate those challenges. A lot of people, when they think about adding value to the NOI, the reason they're doing it is they're trying to increase the IRR. Well, when you're late in an economic cycle, it's important to focus on the opposite of that, protecting your equity position. And so when it comes to recessions, number one, the tenant base isn't very price sensitive. So the main reason is that not only is demand inversely correlated with the economy because of that whole downsizing component that I mentioned earlier, but when you're talking about raising rents, you may go from a 10 by 10 unit may rent from $150 a month or so. This is a prime climate controlled unit. If you raise rents by 6%, which is basically unheard of in the multifamily sector, especially over the long term, you're talking about $9 a month. So the question really becomes, is the tenant going to take the time off work, hire a rental truck, get movers, move down the street where they're probably going to do the same thing just for that $9 a month? So you're really starting to pad your equity when you're dealing with the tenant base that's not price sensitive. But there are other ways that you can add value by just implementing more prevalent management strategies that some of the top tier operators do. So an example I love to give is using U-Haul components. So we look for properties that have no relationships with U-Haul or truck rental companies. We'll buy these properties based on in-place income and then leverage that relationship, facilitate the transaction with movers. And this is obvious. Most people are using those trucks when they're moving in and out of those facilities. And we just facilitate the transaction and get a commission from U-Haul for doing so. The key here, though, when I said earlier about asymmetric returns, the key here is that we're not incurring a proportional amount of risk to implement that strategy. We're not buying the trucks. We're not maintaining the trucks. We're simply allowing U-Haul to park their trucks on our facility. And so I have personally invested in properties where that one line item has gone from $0 a month to $3,500 a month directly to the bottom line. There's relatively no overhead for doing that. So when you're looking at that on a cap rate basis, you're talking about $600,000, $700,000 of value added to the property. So that's a great way to protect your equity, because in the event that there's a significant correction in the capital markets, that $700,000 of equity is going to come in very handy. So that'll kind of give you some of the insights in terms of why I think it's recession resistant. It's about the complexity of the asset class and that inverse correlation with the demand.